Good afternoon from the New York Stock Exchange. I'm Caroline Woods coming to you from high above the trading floor. It's Tuesday, November 4th, election day, and it's been a rough one for stocks. We're seeing red arrows across the board as investors digest another busy day of earnings, along with some cautious commentary from top bank CEOs that seems to really be weighing on sentiment. The weakness is broad-based. It's stretching across sectors and especially hitting energy, industrials, and big tech. All of the so-called Magnificent Seven are trading lower today, with Tesla leading the declines. Bitcoin and gold are also selling off today. One of the biggest movers on the S&P 500 is Palantir. The AI software company posted better than expected earnings last night and even raised its outlook, but investors don't seem impressed. Shares are down sharply. That's despite a monster run this year, up roughly 150%. So some might say it was already priced for perfection. Adding to the intrigue, big short investor Michael Burry reportedly has bets against Palantir and Nvidia. Palantir CEO Alex Karp fired back, calling that move crazy. Meanwhile, Wedbush analyst Dan Ives is telling clients he's not worried, saying investors are treating this as an as good as it gets moment, but that he'd be a buyer here, confident Palantir will be one of the dominant AI names of the next decade. Uber is also in the red despite a strong quarter. The ride-hailing giant beat estimates on earnings, revenue, and bookings. CEO Dara Khosrowshahi told CNBC that the consumer remains strong and that the company isn't seeing any signs of trading down. Still, shares are lower after what's been an otherwise strong run this year. Spotify is another name under pressure after results, even though it too delivered better than expected earnings and topped 700 million monthly active users for the first time ever. Founder and CEO Daniel Ek said business remains healthy and engagement is at all-time highs. Norwegian Cruise Line is selling off after mixed results. Revenue missed expectations, and it's dragging down peers Royal Caribbean and Carnival as well. But there are a few bright spots out there, starting with Hims & Hers Health. The telehealth company beat revenue expectations thanks to a jump in subscribers and growth in its personalized treatment offerings. Earnings were a bit light, but investors are cheering anyway. The stock is up nearly 100% so far this year. Upwork is another winner after topping expectations and raising its guidance. The company, which connects freelancers to job opportunities, said demand remains strong as more companies rely on flexible work arrangements. And in the gaming world, Nintendo raised its forecast for sales of the Switch 2 console, now expecting to sell 19 million units this fiscal year. That's up from 15 million previously. Momentum for its new flagship console continues to build heading into the holidays. Yum Brands is also in positive territory after posting strong results. Sales at Taco Bell were solid, and KFC saw improvement as well. The company also said it's reviewing strategic options for Pizza Hut as part of a broader business refresh. Now onto the more cautious tone we heard from Wall Street's top executives overnight, which may be contributing to today's weakness. Goldman Sachs CEO David Solomon warned that it's likely we'll see a 10 to 20% drawdown in equity markets sometime over the next 12 to 24 months. And then Morgan Stanley's Ted Pick echoed that sentiment, saying investors should actually welcome a normal correction. In his words, a 10 to 15% drawdown that isn't driven by some sort of macro cliff effect. Translation, they're signaling that a healthy pullback may be overdue after a long stretch of strength. On the policy front, it's day 35 of the government shutdown, and still there's not a deal in Washington. If it stretches past Wednesday, it'll officially become the longest shutdown in U.S. history. The shutdown has delayed a number of key economic reports, leaving investors with limited data to really gauge the economy's strength. But we'll get a key read from ADP on Wednesday that should offer some insight into how the private sector jobs market is holding up. Also on Wednesday, the Supreme Court will hear arguments over whether the president can impose global tariffs under emergency powers, a case that could have major implications for trade policy going forward. And tomorrow also brings another full slate of earnings. We'll hear from McDonald's, Elf Beauty, Snap, Robinhood, AMC, Qualcomm, ARM, and AppLovin, among others. So a busy stretch for markets with investors juggling earnings, macro headlines, and now a bit of caution from Wall Street leaders. That's all for now. I'll see you back here tomorrow for another update. From the New York Stock Exchange, I'm Caroline Woods.